Thank you very much. It's been a very interesting day, to say the least. In terms of who we are, Market is an index provider. We're one of the leading independent providers in the fixed income and credit markets. Markets that tend to traditionally be dominated by sell-side indices because of the availability of the data. We don't operate any indices today that are derived solely from exchange data, so we're not in the equity space. We're specialized in what market participants may characterize as the OTC markets. From a market perspective, we have been largely supportive of the EC proposal. In fact, we believe that the broader the scope, the better it is, because it ensures a level playing field. However, this does come with two additional requirements in order for any proposal, when speaking about implementation, to actually reflect the changes in asset classes, the changes in asset class, the differences in the instruments, but also the varying use cases of indices depending on the market that they're trying to serve. And that's a principle that has been highlighted throughout the day, which is essentially proportionality. The other principle that, again, is very important, and the previous panel spent a lot of time on, is the nature of the global markets and the fact that there's hardly any index providers today that actually serve a single component of the market or a regional component of the market. Market is one of the providers that operates global indices. Our clients use our indices as a benchmark for global funds across jurisdictions. So that's linked to the IOSCO principles, and the ability to be able to implement cross country is extremely important for any regime to be successful in application. Naturally, because of what we do, there are two areas that I would like to focus on. And these are, first of all, the appropriate use of data, be it transaction data or other data sets, in order for an index provider to be able to create and operate an index or a benchmark. And then secondly, the transparency that may come with such process as may relate to service the user base. In terms of the products that we operate, it's important to note that I would say that we largely serve three purposes. The first one is trading and structuring. So a lot of our indices are being used by institutional investors in order to make markets in a particular asset class. Secondly, which is probably the widest use case in the index space across asset classes, is the traditional benchmarking or the asset management fund benchmarking, where the value of the index wouldn't affect the value of the fund, but it is being used as a reference point. And then thirdly, which is an increasing use case, and it has attracted a lot of press, is listed funds, or ETFs. All of them are very important, but the construction principles that relate to an index may drive different use purposes in very different ways. Going back to the transaction point, simply because the fixed income markets are not solely traded on exchange doesn't mean that an index provider may not be able to operate or create an index in a credible way. What is extremely important is for the index provider to operate under three main principles. The first one is breadth of data. I think it's largely recognized that in these markets, whether it's solely transaction data, or solely quotes, or solely other observable inputs or evaluated prices simply doesn't work. Secondly, the ability to continuously evolve the pricing methodology to actually address the underlying market structure. There have been cases in Europe recently where benchmarks, fixed income benchmarks, were priced 100% on prices generated by platforms, which may have been appropriate during a time period where liquidity was sufficient on these platforms. But when liquidity dries out and prices are not available, the index provider has a big challenge when it comes to coming up with a credible price. And when these indices are linked to ETFs, then this creates an even bigger problem in the market. So the ability for the index provider to take in suggestions, to take in challenges, and to be able to actually adopt practices depending on the user feedback is extremely important. Again, there have been cases where end users or funds have had to switch benchmark because index providers haven't been quick enough to respond to the particular needs or to respond to the changing market structure. So we think that the EC proposal takes into account not just the proportionality, but also the varying inputs that can be used as part of the construction. So we welcome that development. As it relates to transparency, I think that there's been a lot of debate today on the transparency of data. So the publication of the underlying data inputs post-publication of the index. From our perspective, we think there are three levels of transparency. First of all, there's transparency as it relates to IP. So that's the index methodology. These are the principles behind the selection mechanism and the construction of the portfolio. There's been a lot of arguments, particularly when it comes to strategy indices or factor-based indices, that IP is extremely viable, is too viable in some cases from a commercial perspective to disclose. We have been operating indices on that basis since we entered that business. Our principle has been to always make this principle, the methodology available, and this is because we think that one of the key underlying principles that drive the benchmark selection is the ability for the end user to replicate the performance of the index, and for the ability of the end users to actually be able to challenge the performance of the index if they don't agree with any of the methodological decisions or data inputs. So transparency on that level is extremely important to be able for us to restore confidence in indices. The second level of transparency, which is something that we haven't really touched upon so far, probably because we're focusing on transaction-based indices, is pricing methodology. We think that it's okay not to have indices or benchmarks solely based on transaction data. But what is important at the same time is for the provider to explain to the user base what methodology they are applying. It's good to say that we apply expert judgment, and I do agree that in many cases it is absolutely necessary because it reflects the way that the asset class is being priced, and it reflects the way that the asset class is being traded. But transparency is extremely important because it allows the end user to challenge the decision and the expert judgment that the index provider may apply. It's also very important for the provider to again be able to take on feedback from the market and have the ability through a governance model to be able to continuously update that pricing methodology to reflect market structure. For example, it's noted that today in Europe there is no public post-trade transparency. There is no public fixed income data that can be used by index providers, contrary to the market practices in the US and contrary to market practices in some of the markets in Asia. This is likely to change post-MiFID II. And as CEFs are being introduced and trading practices are changing, again, different data are going to become available. So that ability to evolve the product and adjust the practices is extremely important for the index to remain current and representative of a market segment. The last element is publication of the underlying data. We do agree with some of the comments that were raised before that this may be challenging implementation-wise because in many cases the index provider may not own the intellectual property rights to the underlying data. However, if the principle that is driving the transparency requirement is, again, for the end user to be able to replicate the index and to challenge the index, then some of the delayed transparency concepts that have been introduced will be useful. It doesn't mean that all the data has to be available on an end-of-day basis. It could be that it's available on a monthly basis or a quarterly basis. Again, it depends on market practices and the desire of the end users to rerun the portfolio and then to check the results themselves. From our perspective, we do know that that's habit for the particularly for the asset management community. This is why a lot of them do consume the data, and that's a mechanism for them to be able to challenge the results that the index provider has arrived to. We think that.
I'll ask you to go to the conclusion.
Yeah, sure. So as the markets move to, we heard about passive investment, we heard about rules-based indices, transparency. I think it was State Street that noted that they prefer index providers that are open to dialogue and challenges. We think that the transparency principles, if they are adopted across the board of the index administration and calculation, will actually strive towards the same result. Thank you.